Welcome friends and traders. In this next system we are going to use GAN wings to see how we can find the extreme endpoints and trade. In this system we have on the left chart ES 44-minute time frame, and we have a square which is 0.44 by 2.2 per bar. We have injected two system indicators. One is the level 1 oscillator at price that is set to 1800 hours New York time. Very important. Second one is your big bar angle. These are both level 1 tools. On the right side, this being a two charting system, we always use two charts, is L1PP big bar angle. Now that's all, nothing much to do here. And then we have the chart setting which is 0.25 by 1 by bar. This sets up the structure we are desiring to trade on this day. If you lose the tool, for example, if you can't see the tool has disappeared or something has moved, you can always press shift to find the hot spot and relocate and move. The location of placement depends on your experience with the GAN angles. We project this to be used by various locations, one being big bar as the name suggests, other one we can put on pivots by pivots. On the left side, which is the driving chart, we have located the perfect entries where we want to trade. First we will look at the pivot high and low. This is the demonstration of using pivot high as the and lows, projecting the angles. So what do we have here? We have this expanding bat pattern where we have the top being hit on the left side in the second angular space right here. What are we expecting as the market rolls down? Is gonna hit on the same space. It is bouncing between the angle and finally it has taken its final decision for the week. And look at the oscillation, green lines on lower, we want to be going long. White is balance, so it is out of balance a little bit, giving us the bias push to the upside. At the same time, we're going down to 10-minute chart, as you can see here. On 10-minute chart, as we have configured 0.25 by 1, as you can see it again, 10-minute chart. Now finding the same location endpoint on that day, we will have to go back, which we will go back now. As we relocate, the overlay will be lost. You relocate it again and you punch it at the same spot again. So what are we looking for? How do we place it? So now the best placement, as I said, we have to curve fit it a little bit. Same thing we are doing it. We are curve fitting this low and it hits this angle. We are looking for it spiral down. Confirmation is going on. Confirmation is going on. Finally leading to 820 low. For those who demand extra insights, they can reach out to 369 L1 balance imbalance oscillator on the execution chart. Now we're gonna zoom in a little bit. As you can see, as we relocate, we control K will refresh the screen and we get it here. We can see there's a big punch. Now this input is also there for this balance imbalance. You can move it to 10, so it's going to look at last 10 bars to look at the imbalances. so it slows down. So here we are, extremely below blue and extremely above blue is what we are looking to use at the location of interest. We're curve fitting the data a little bit. Alright, there we go. So this is how you can add the indicators. Now if you are trying to go short from here, right, we have to look at how the market is reacting to these. For here on the left side, the driving chart is very clear that you should be looking at short. Market went up into the upper angles. The last angle, the innermost angle, is again 45 degrees right here, with the time and price is supposed to be balanced one-on-one. Change of time and price is supposed to be same. This is a very deeper concept, but that is his idea which came about, and we can trace it through various methods. This is just one of the methods. So if you're below 45, shorts only, above 45, longs only. But the key is to catching on this side. So market was catching and came back to 45, came back to 45. Now we also have another resting scenarios right here. We can see on the oscillation trying to go up. Here also same thing. Now you can see, because we're using a different kind of angular shapes based on the square, what is hitting 45 here is not hitting here. So see this? You can spend a lifetime finding the perfect squares. That is why we love to do some curve fitting to make our life easy. So in this case, we keep the left side constant. On the right side, we can move it. Now we are looking at market has gone up, is coming back to 45, coming back to 45. Can we convert something? Let's look at 22. So where can we place this? Where can we place this? Right? So remember, the name of the tool is big bar. You can always find big bars, which basically means the square which is being positioned here, it looks big, right? All right. Now if you want to change the angle, do some space management where you can change the if you want to go with 5 minutes, you play with this where you can see how the squaring can be in some kind of harmonic ratio. Alright, so this is how you can start. This one looks okay because it is harmonized perfectly, because there are 22 letters of Yahweh, and then 44 is double frequency, not 44 minutes. So we'll keep this as is. So now the location is already on a lower time frame. So if you do this right here, we're looking for the go long. In this area, right? So what do we do? This one is gonna frequency inside a frequency is telling us, now this failed. Now you can see this, right? It failed. So this is where you will have challenges with this. So how do we really trade this on a lower time frame if you just want to look at scalping and things like that, right? So if you don't like this, what we do? This is where you need to do some work on your specific instrument you're trading. Maybe we'll say I will do 333, or I will do 0.222, and I will do out 2. So you have to spend some time analyzing your specific market, how based on this volatility you may have to adjust the squares. It's not a single answer you walk away from this. So So easier to see on a bigger time frame than a small time frame. You're back to 22. Alright, so 22 from this high. So where's the big bar here? Alright, so what we do is, okay, so one of the things what we do is when we see a swing coming in, swing going out, so we can take this as the chaser, I would say, right? This is the bigger bar coming down, place it here. And then what we say, when we leave 45, you're gone. Got it? So this is gonna take some time to get ready. This is gonna come get ready faster. So where is the stop loss? Going to be where is the stop loss going to be? Where is the entry going to be? So if you're gonna take this shorter time frame entries on exit of 45, that's what that rule says of this angle. If it breaks and closes above this, just vertically down there is your stop loss, and you're looking for exit. Okay, that's the thing right here. But it is all driven through that the higher time frame is ready and telling you pick the long direction. So at this location, the left side oscillator, right side oscillator has converged, and we curve fitted it to 22.2 degrees, half of the square, and it hit it. We confirmed it. Now we're looking at it. Okay, this momentum down is confirmed by this. Okay, all right, we got it. And then 45 leaves, we go. Okay, so let's take one example, and that is how we have been saying that you chase the bar going down. This is the big bar, this is the big bar. You can chase the big bars, chase the big bar. 45 left here, stop loss is here, you go. You understand? Alright. Okay, cool. Let's do one more. What if we just do this way? Our typical way, second typical way, which is we curve fit it. On right, second, which is this is 45, one above, below, right? So here we are. The deeper it gets into vertically dropping into these angles, look at this. This is long, but if you place it properly, how do you place it properly? Place it properly is we getting this angle, break, retest, 45, break. So you cannot do multiple things at the same time. So this again is a system in itself. Now where's the stop loss? We'll take this height, and that's it. And place it below this if you want to catch that. So market is coming, you see, at least see one green bar come in, right? We have to see this. Now this guy is telling us it's gonna snap up. So it is inside this angle, ready to snap up. You may not be able to catch the two tick, but this distance between the two is a stop loss. So we adjust this distance very quickly. We get in quickly and we adjust the distance quickly, and we say, okay, we're gonna go for it. And how do we go for it? Wherever your entry is, right? The distance is telling us stay away from it. If you catch this, when you are trading this, if you catch this, luckily this one, boom, 1 2 3. If you catch 145 exit, stop loss is right there. 45 exit, never got stopped out. You got your profits as well. Was it 25 points, 30, 40 points, 10-minute chart? Not easy, right? Not easy to not have profits here. So that is, I think, easy. Initial levels of models and initial levels of trading phenomena, how you can do this, and there's no reason why you cannot have multiple of these going at the same time, one going up, one going down, right? All right, Now you can also look at a very big swings too, curve fit the data. As I said, there are people who have spent 20-30 years of their life just doing this Gann angles only. That's it. And they have taken that to the next level of mastery. Now here, where's the trades, right? No trades. Next step. Came to 45 and jumped from there. Again. So what we will be doing, we'll be curve fitting it to 45. Precisely. Right here. Boom. I'm curve fitting this 45 bounce, 45 second bounce at the level, and the high time frame is driving this for us. Same thing can happen on this. So I'm just giving you this is a traditional way of doing things on Gann. Swings, wings, curve fitting, and then having the two oscillation giving us the bias and the direction, and you can trade this beautifully. The laws of nature from Gann is pretty clear. Above 45, below 45. 45 touch is harmony. This is the way the time and price came together. So the real reason is this time and price came together here and here. Expect the change of direction. Thank you so much.